We're moving into Chapter 3 now, and in Lesson 3-1 we're looking at journals, source documents, and recording entries into a journal. So now that we've laid the groundwork of understanding how the accounting equation is affected and what exactly the accounting equation is, and then we've looked at T accounts and figured out how exactly each account gets affected and the difference between debits and credits and how all of that work. And now we're going to take a look at journalizing those entries. The first thing I want you to look at is I'm going to show you a couple documents here. The first thing is the 5-column journal. In the 5-column journal, what we have is we end up with the date, the account title, document number, post reference, and then right here are the 5 columns that the journal is named after. Right here we have general, as in a general account debit or credit, and right here is where the account title will go. Then it could be either a sales credit and then also a cash debit or credit, depending on the general journal. This is a 5-column journal, just to give you a basic start off with. The next one is checks. So if you take a look, this is a check stub method of recording how much each check is. So right here is the check stub, which once the check actually gets taken off, and this goes to the person that you're paying, so in this case it would go to Port City Supply. And then over here, the check stub, what it has a record of all of the numbers on there. So basically, if you have a deposit in there, that goes in there, and then it just shows what the balance carried forward is, so it continually shows how much money you actually have in your checking account right next to the check. This is a different way than a check register that most of you may have seen in personal finance. And then a sales invoice. This is just a general thing saying, all right, from Techno Consulting, we sold to Oakdale School, and this invoice basically just lets us know that Oakdale School has 30 days in order to pay up the $350 that they owe, and what exactly was it, and we set up their computer network from Techno Consulting. The next thing is some other source documents that we can look at. We have a receipt here just showing that Kim Park was the one who received it for an investment, just showing that she gets a receipt saying, yes, we did get your investment. You also have a memorandum just saying, hey, we're sending this. We just want you to know that we bought supplies on account from Supply Depot for $500, so we're going to have to owe that at some point, so we get that from a memo. And then you have the calculator tape. So this is from all the sales. So we added $150 in sales, $35 in sales, $110 in sales. So we got $295 on August 12th, 2000, whatever year it is. And this is from ticker tape number 12. Now let's take a look at recording entries into the journal. If we receive cash from the owner as an investment. On August 1st, we received cash from the owner as an investment of $5,000. So we got that from receipt number 1. This is where your source document now comes into play. With that, we have our journal here, our 5-column journal, and now let's break it down and how we filled it out. And then we also take a look. What 2 accounts are affected, as we've been talking about in Chapter 2. What 2 accounts are affected, and it's going to be cash and Kim Park Capital, so that we identify those are the T accounts that are affected, and that both sides end up being affected. In writing this general journal, or in writing into this journal entry, the first step is to write the date in the date column. So in this case, we have August 1st, and we put that in there right there. The next step is to write the debit amount in the cash debit column. So we receive cash, so the second thing is to, under here it's going to say is it a cash debit or a credit, because in this particular journal, cash is generally going to have something happen to it. So what we have here is $5,000 worth of debit, because in our T account that's the one that's going up. And for every debit we must have a credit. So then we have to record the credit amount in the general credit column, write the title of the account in the account title column. So if you take a look at the second account that was affected, it was Kim Park Capital, which is increasing the amount of capital into the company. So that's going to have $5,000 in it. So that's going to be a $5,000 credit that we put there. The account that we're crediting goes into here under this general, if it's a general debit or general credit. Now the actual account or account title goes right here with Kim Park Capital. Goes right there for the account title. And then the fourth step is to write the source document number in the document number column. So if you take a look at this document number right here, comes from receipt number 1 for that fourth step in order to find out how exactly do we fill in this particular journal. And we'll go over that in the work together. Now, paid cash for supplies, another type of journal entry. On August 3rd, we paid cash for supplies for $275 on check number 1. Every time you get a scenario that's happening, make sure you break it down. So the first thing that we want to find out is what 2 accounts are affected. And if we paid cash for supplies, we know that cash and supplies are our 2 T accounts affected. And how are they affected? Now they're both assets, so we're going to plus on the left side and minus on the right side. So now we go for it further. Now we want to write the date in the date column. So this happened on August 3rd. We didn't write the month in that particular one because we already did previously, and we just have to write the numbers down underneath it into the journal. The second step is to record the debit amount in the general debit column, and then write the title of the account in the account title column, because we want to record our debits first. If you recall from the last one, we did the cash debit first, any debit that's happening. Supplies is the one being debited because it's an asset account. That means a debit is going to increase it, and we bought supplies, so the amount of supplies we have on hand increase $275 to supplies. The third step is to write the credit amount in the cash credit column, because cash is going to decrease $275. Now the fourth step is write the source document number in the document number column. So as you take a look, this came from check number 1, so in the document number column we write down C1. Some terms review for you to understand, and make sure you're checking these off in your study guide if you have them, and also go over them. We have journal, journalizing, special amount column, general amount column, entry, double entry accounting, source document, check, invoice, sales invoice, receipt, and memorandum. And that's it for this section of 3-1. We'll see you for the work together.